Nvidia is the hot discussion, and in a day today with the Nasdaq currently down 1.3%, Nvidia is holding strong. It is only down 0.1%. Now, guys, as you know, Nvidia is up year to date about 200%, off its all-time high of 502 back in August. Now, it is 502, but like early pre-market, it hit like 510 or 512. So this is the intraday close, intraday high. Now, for Nvidia, it is an exciting stock. It's going up a lot. AI is exciting. They're killing on revenue. But remember, what we try to teach is even a good thing has a good price, has the right price. Everything that's great, you have to still put a price on it. And that's all we're saying when we're trying to teach in this channel. So in this video, guys, we're going to go over Nvidia, some high-level metrics, some news, some bull and bear cases from our community. Our community members get asked, what are your bull and bear cases about a company? And I'm sure there's going to be a lot of Nvidia. We're going to go over the analyst estimates. Of course, we're going to cover our 8 pillars in the company. And then we're going to finish it off with probably what you're thinking about the most, which is what is the right price to pay for Nvidia stock. So whether you're a beginner investor or an advanced investor or somewhere in between, there's something in this video for everyone. Just watch the entire video because as it goes further, it gets more and more valuable in the video with information. So Nvidia is a $1 trillion company. The market cap is $1 trillion. What does that mean? Well, that means if you wanted to buy every share outstanding of the company, you'd pay $1.04 trillion. Now, something I love about Nvidia, their enterprise value is $1.05 trillion. So essentially the same. What's the difference here? Basically their debt net of cash. This is awesome. This basically means they have no debt. I mean, they have debt, but if you take their cash off there, it's about $10 billion more. That's an easy cover for a company that does $33 billion in revenue and generated $10 billion of cash flow in the last year. All right. Now, I do love this. Their net income and 5-year net income basically matches their free cash flow and 5-year average free cash flow. Literally almost to the 10th of millions, to the $10 million. That is great. That tells me that I don't have to worry as much about is there fraud going on. All right. Now, PE 101, 5-year PE 167. Now, guys, that's high, but could it be reasonable? Well, if you told me right now that Nvidia's profit was going to double every year for the next 10 years, I would put my entire net worth into Nvidia stock. Of course I would, because $10 billion becomes 20, becomes 40, becomes 80, becomes 160, becomes 320, et cetera. For the next 10 years, this thing's making $1 trillion in no time. So of course I'd pay $1 trillion for them. But the question is the future as good as the price being paid is going to give you? Yes, it has crushed, but that's why we're here on this channel trying to teach a process. We're trying to teach everyone that every investment is the present value of all the future cash flow you'll receive. So if you're new to the channel, I want you to think about that. The return you're going to get on an investment, whatever you pay for it today, if you take all the future cash flow and then bring it back to today, that's going to be your return, comparing it to what you paid for it today. Obviously, the less you pay for something, the more return you'll get. The more you pay for something, the less return you'll get. So that's what we're trying to cover here. Let's go into, oh yeah, by the way, also, something I love about Nvidia. 5-year return on invested capital is 20%. 1 year is 28%. The average of the market is 9 or 10%. So what this says is they do a phenomenal job of getting a return on the money they invest in the business. Phenomenal. Keep that in mind. All right, let's pull up our community discussion on Nvidia. All right. Roger writes they have 84% of the GPU market share. Fair enough. Roger also writes they're growing their data center revenues and expanding their data centers. Data centers are increasing their gross margins. Yeah, so the gross margin on a chip is probably a lot lower than the gross margin on a data center. Because on a data center, they're just handling data. What's the actual extra cost to handle extra data? Not much. But like, for example, making an iPhone or making a server or making a chip, those things cost money. So when you sell them, you have a lot of material costs. But for data, what's the material cost? You buy the servers, you buy the computer, you buy them once, and then every extra incremental dollar that you bring in is pretty much all profit. I think they meant bear case, definitely overpriced and selling shares at 100 PE. Guys, the other thing is One of the other bear cases, there's been a lot of selling from insiders, including the CEO. Now, I keep asking on Twitter, is this abnormal for him? Because he's not selling a lot. Now, granted, he's worth 20 billion, whatever amount of money he's worth, and he's selling hundreds of millions of dollars, but it's every month. It's a lot. Again, people sell stocks for different reasons. They only buy stock for one reason. They sell stock for 1,000 different reasons. They buy for one reason, that's to make money. So don't look at it too much, but there has been a lot of selling activity by the Nvidia team. D-Money writes, a leader in the chip industry, the valuation is a little much for me to swallow. I know they're projecting high revenue growth, but I'm not sure they'll attain that. Isn't this in the Kathy Wood's portfolio? I don't know if it's in Kathy Wood's portfolio, but he brings up a good point, guys. Listen, they are a leader. They are growing a lot, but are you overpaying for that growth? That's essentially what he's saying. All right, Nate. Nate writes, bull case, early innings of the AI revolution, 100% he's right, and NVIDIA will likely have at least 50% market share of AI chips for 5 years, while AMD and Intel play catch up. Also, they aren't diluting shareholders anymore. Bear case, much of the recent revenue growth and earnings growth is likely a pull forward due to large tech companies stockpiling chips. Very well could be the case. Valid point. I don't know if it's true or not, but that could be the case. Forward PE and forward price to sales is likely artificially much lower than it really is. This pull forward of sales and earnings will likely weigh on the stock for the next 5 to 10 years. So what he's saying is, look at this price to sales ratio, 32. This is high. A company like Apple is at 7, Microsoft's at 12, and I think these two companies are overpriced. This is 32. 32 times sales. For every dollar they sell, the market's saying that's worth $32. Not profit, sales. This is high for even a profit, a PE ratio. It's just compared to sales. So after sales, they got to pay all their expenses, everything, and taxes, and then they get their profit. This is saying 32 times their sales. That's a big number. It was 45 just recently, but they crushed sales again. Okay, so going back to our discussion here. So Wicked Willie is Dalton, our in-house analyst. Bull cases. Growth in data center sales drove 101% year-over-year growth in the most recent quarter, and they raised expectations for the next quarter from $12.4 billion to $16 billion. Another one, generative AI industry is expected to grow at a 40% compounded annual growth rate over the next decade. Guys, we really are in the infancy of artificial intelligence. We absolutely are. Guess what? In 1999 and 2000, we were in the infancy of the internet. And look at how many internet companies went under. Look how many internet companies that even are around today didn't do as well as even the market did. That's what I want you to remember. That's overpaying for a good thing. Look how many companies from 2000 have not surpassed their 2000 highs, even though revenue and profit are up 2, 3, 4, 5 times since then. If you overpay for an investment, it takes a long time to recover that. All right, bear cases. Amazon rejected NVIDIA's DGX cloud platform and will make its own servers, while Tesla is working to build its own supercomputers to cut reliance on NVIDIA. Okay. U.S. is restricting chip sales to China, and this is an issue as 20 to 25% of total data center revenue is from China. All right. Bull case. EM has made 106 videos on it. Bear case. EM has made 106 videos on it. Thank you, Brad. That is very funny. I appreciate it very much. So, guys, this is why I love our community so much, because we're getting so much engagement. What was that, Tim?
That's not real.
No, I know that is not real numbers. I think he's being funny and facetious about 106 videos, but the whole point is it's a funny comment to make, and I love it. All right, let's look at the 8 pillars. Hoo-ha! All right. So, guys, I'm not worried about shares outstanding. It's only up 2%. I don't care. That's not a big deal. 5-year PE, 167. 5-year price of free cash flow, 170. Everything else is a check. And I love how consistent their numbers are. Net income grew 7.6 billion. Free cash flow grew 7.9 billion. Their debt is low. Their ROIC is high. Guys, it's just a valuation here. It's just about valuation. What's a reasonable price to pay? Is it now? Granted, I do agree that if Nvidia, if let's say, for example, this is a permanent plateau and they're only going up from here, which I wouldn't necessarily discount the fact that this AI surge could be temporary and then it comes back to reality. That has happened before. I'm not saying it's going to, but let's say this is a plateau. What would have to grow per year to justify these values? when you can buy a company like Apple, which it doesn't have as much growth, for 30 to 35 times that. Now you might sit there and say, Paul, come on, Apple versus Nvidia. Yeah, I gotcha. Nvidia has a lot more growth potential than Apple does, but there's also a lot more risk involved with that. Is that growth? Look at the surge in revenue. 10 years ago, 4.4 billion, 4.8, 5.4, 8.3, 11.9, 10, 13, 22, 30, $33 billion in revenue. It is up 8 times, 7 times, 7.5 times since 2014. That's a lot of growth. And guys, look at history. That doesn't replicate itself for multiple decades. It does not happen over long periods of time. It's just too difficult. Could this be the anomaly? Sure. But remember, if you're investing based on the anomaly, it's no different than investing based on waiting for the Great Depression, 86% crash to happen in the market again. It's not going to work. It's just too difficult. All right, let's see what analysts are saying about the company. So they expected 330. They're expecting for the next year $11 per share in earnings, growing to 13 over the next 5 years. And these are analysts who are supposed to be very enthused about the company. Here's what's weird to me: 11, 17, 1970, 1050, 13. Big drops. That's weird. Revenue growth. Oh, this revenue stuff is all over the board here. Guys, I don't even like these analyst estimates. I'm not even going to pay attention to them. So let's just go to Stock Analyzer tool, because really what we care about is what's the right price to pay for NVIDIA stock. Now, you've heard me talk about the community. You've heard me talk about the tools many times, and you probably wondered what they're about. So here it is. Now, I am not asking you to make a yes or no decision this very second. What I'm asking you to do is to make an informed decision. And you can't possibly make an informed decision from the outside. You gotta be on the inside to make that informed decision. Just like if you're gonna test drive a car, you're gonna buy a new car, you gotta go take it for a test drive for 15 minutes, right? But no different here, except now what I'm asking you to do is take a 7-day free full access test drive. Get into the software, use the community, use the tools. It has skyrocketed since we offered this last week. It has surged the number of people who've loved it. At the end of 7 days, when you realize all the value you get, how it's going to help you make a better decision, then you'll have the opportunity to buy. And at the end of 7 days, if you sit there and say, this isn't for me, no harm, no foul. My feelings aren't hurt. I understand completely. Keep watching our videos. You'll learn a lot. And someday in the future, when you are ready, you'll be able to come back in and sign up. But again, what I'm asking you to do is to make an informed decision. So if you want to make that informed decision, go to everythingmoney.com right now, sign up. All we need is an email address, nothing else. Sign up with your email address, get engaged, come in the community, say hi to me, and I guarantee that at the end of 7 days, you will sit there and see the value in this software. So come check it out, everythingmoney.com. Now, for NVIDIA, let's pull up my history on NVIDIA. So guys, last time I did NVIDIA was August 23rd. So let's pull it up right here. Now, I'm going to look at these assumptions. So for 10 years, here are the assumptions I had. This is my 10-year analysis. Remember, you can do 1 to 20. Revenue growth. I did a low of 10, a middle of 20, a high of 30. For profit margin, I went 20, 30, and 40%. Now, 20 is probably pretty low. Same with free cash flow. But at the same point, they've seen a big surge lately in their profit, so maybe it tailors back a little bit. It's an average over time. I don't know. But I do like 30 as my middle number. Now for PE, now remember, this is the PE and the price of free cash flow at the end of 10 years, not today. It's currently at 101 and 101 for both of these. I put in 20, 25, and 30. Guys, to be honest with you, I think these are too high. But I'm putting this in here just to show, okay, let me be aggressive even overall. I would really put 15, 20, and 25. Okay? Now finally, my desired return. What return do I want for this investment? Multiple factors involved. It'd be factors of, what am I expecting from the market overall? What other opportunities do I have? I can get 9 or 10% from investing in a long-term ETF over long periods of time. So what do I want here? Now, in this one, I put 10% just to show you the value. But what I'm actually going to do is I'm going to show 10%, 13, and 16%, because I really, truly believe NVIDIA's got a lot of, the surges always concern me. And I know that's probably hard for a lot of people to hear, but when a company jumps up their revenue and profits so fast off of something that's very recent, it always concerns me. That is not something that can usually go on forever. So I still want an ample margin of safety here. So 13% and 16% on the high side. So I'm at the analyze button. The stock is currently up, by the way, 0.5%. Now, all I want is 1 or 2 more minutes of your time because I want to explain these numbers to you. I'm trying to teach everyone how to fish. It's not just about giving you numbers and say, go do something with it. No, it's about understanding where the numbers come from. So we scroll down. Guys, I have a low price of 75, a high price of 577, and a middle price of 230. So on the high side, guys, I can justify this company if I believe all my high numbers. If I believe they're going to have 30% growth rate, if I believe all these other things. But on the low side, I have 75. It's for your decision. I currently have my watch list at $75. I'm actually going to change that. I'm going to put on my watch list for 100. But when it hits 100, which it was just early this year, I'm going to do more research and check it out and see if I really believe that value. What has happened since there, if it does hit 100? And for those of you who say, oh, Paul never hit 100. Okay, it was just there in January. It was just there in January. Guys, thank you very much. And go to everythingmoney.com to sign up for our 7-day free full access trial.